All right, man. Good day, good day. Welcome to the Daily Money Markets. The platform that we actually share knowledge in terms of the Forex trading and everything that is happening in Forex, man. From the broker to a trader to the platforms, to the tricks that you can find in a Forex market. We always try to gather those information and to share with everyone so that we should be aware when we are part of this Forex. If we are part of this industry, we should be aware, and we should share the information and make sure that we learn. So today pretty much wanted to understand how Forex brokers works, and again how they make money. So there's so many rumors out there that people, they say Forex market, it's a platform that people, they get robbed. Others, they say they manipulate. Others, they said, others, they lose money for just giving people money without understanding what exactly Forex is and how it works and how you can get involved and who are the players in a industry. So as one of the player of the industry who want to push this market to make sure that everyone else should understand and actually learn about it, and eventually maybe we can be able, all of us, and start trading, man, start reducing this unemployment, or whether just to find a ways of making something aside besides of depending of money that comes from from whatever you do. So yeah, this is actually a Forex presentation. We do have, a platform on the YouTube where there's a Forex presentation where you can go check different types of presentation that I've been doing, long ago. So it's been long since I actually do the presentation. Today, I thought maybe we can just come out and talk about how brokers works and how they make money. So that as early as beginning of the year, we should know, how these things work. So yeah, let's jump in it. Starting. All right. So first of all, of course, we're gonna have to start from from the top, from the beginning. What is a forex broker? I've heard a lot of people saying that my broker just take my money, or I just give my broker money. A broker is not an individual human being, or is not an individual person. There's so many things that happen, to be a broker, or the entity to be a broker. So a forex broker, it's a financial service company that provides the traders access to the platform for buying and selling forex currencies. Remember, a financial service company. So it's not just someone who's sending you, a messages on Instagram or messages on Facebook and telling you that he's a broker and claiming to have, to say that they're going to take your money and do everything or trade for you. That's where we need to understand that it has to be a financial service company, right? A Forex, in short, for foreign exchange and transaction in the Forex market are always between a pair of two different currencies. So exactly when we are actually in a market trading, in terms of the word Forex or foreign exchange, it's actually based on between two pairs, one pair against another pair. That is why those who understand Forex, when we're trading, you see two different symbols in one pair are made as an instrument to become as an instrument that you and me, we can be able to trade. A forex broker may also known as a retail forex broker or a currency trading broker. So different ways depending with the different area. Some, especially in the US and Europe and the UK, they like to call it a retail forex broker, right? Because of you and me, what we're doing, we are actually trading a retail. It's a retail trading. What we're doing, we're not doing investment trading, or like where companies come and put money and make it, to say that they're going to take it in a certain days or certain number of months after the profit has been made. So mostly as what we are doing, it's a retail trader. Another example is because of we are buying something that we can cash out immediately, right? When you enter a trade, you can cash out after 2 minutes, after 3 minutes, after 10 minutes, depending on how you actually want to hold that instrument for whether how long you want to hold that specific instrument. So that's why it's called the retail Forex broker. Others, they call it the currency trading broker, because most of the time it's actually currency pairs that are actually associated on Forex broker. All right, hope we understand that part. Again, whenever you have questions, you can just drop the comments, and then we can answer or we can whether send the email, and I can be able to reply via the email. And yeah, for the sake of helping. So understanding the Forex broker. The foreign exchange market is by necessarily global at 24-hour market, right? As we know that you can trade each and every single time 24 hours. There's a different sessions in that 24 hours, whereby maybe, if you check one of the presentation, you might find a presentation where we talk about the sessions of the market. There's an Asian session, there's a Sydney session, there's a New York session, there's a European session. Again, there's another fifth sessions, but which is it doesn't really, Tokyo session doesn't really consider that much. It's only those 4 sessions that are mainly trading in that period of 24 hours. So you don't have excuse. You can trade each and every time. You can trade whether at night, you can trade AMs when you get bored, you can't sleep, you can just wake up, check it out your phone or your laptop and check the market. Concentrate with the instrument from that sessions, and then that's it. You active in the market. The clients of Forex broker include the retail currency traders who use these platforms for speculations of the direction of the currency pairs. So what we're doing in a Forex, it's actually speculating the next move, right? Because we don't know where the market is going to go, but based on the history, based on how the market has been going on, we trying to speculate the next possible move, the next possible position where the market will go. So that's what we do in Forex. It's speculating the next direction of the trade. That's it. If you get it correct, you're making money. If you get it wrong, you're losing money. That's a simple way of putting it. Their clients also include a large financial service firms that trade on the behalf of investment banks or other customers. So their clients or Forex brokers, it include you and me, which is called the retail traders. Also, it can be investment banks or investment banks or people that are actually having the large sum of money, or they combine the money together like stock fails and so on and so forth, and they want to participate and grow that money in the market. They can be able to participate in a Forex trading through the Forex brokers, all right? So the key point that we need to actually take when it comes to the Forex broker. So the first one, the Forex or foreign exchange trading is primarily between pairs of the currency of the nationals that are represented in G10. That's the major key point there. The reason why we are actually indicating that it's a major key point is because of once we understand that most of the currency pairs that are here and that we are participating there on the G10, that means you always focus also to those countries in terms of the fundamental news that are coming in. What type of fundamental news that are coming from G10? Especially even when the G10, G20, they're actually having the conferences. We saw people like us who understand this game and trading, we always pay attention when G20 is actually happening or G10 is actually happening, economic forum is actually happening, because of most of those economic forum on G20, G10, they are countries that are have the instrument that we trade, or that they have currencies that we trade in a Forex market. The clients of Forex traders are currency speculators or investors for large institutions. Clients interested in investors have number of choices among Forex traders online. As we said already, that the people that are participating in trading, they're actually retail traders like us, or they can be guys that are investors having large sum of money and try to invest, put money in the market and see how the market is going to come about. So the role of Forex broker, most of Forex exchange transactions are between pairs of the currency of the 10 national that make up to the G10. As we said, that most of the transactions are between the G10 countries. So if we are mostly, you know, participating in it, understanding how the G10 world works, United Kingdom, you know, France, Germany, United States, you know, Italy, Russia, these are pairs that are in a Forex market that we should be able to participate and to understand. The nationals and their currencies include the United States dollar, which is USD, the euro, which is European, the pound sterling, which is GBP, Great British Pounds, the Japanese yen, GPY, the Australian dollar, AUD, the New Zealand dollar, NZD, the Canadian dollar, the CAD, and the Swiss franc, which is CHF, called CHF, the CHF. So these are the G10 countries that are participating in a Forex market. And as a broker, when you are actually offering your product, these are your product that you're offering for you to us, to you and me, so that we can be able and trade in a market. I hope we are getting it nice and easy, nice and clear there. All right. So most brokers allow customers to trade in other currencies, including those of emerging markets. Using a Forex broker, a trader opens a trade by buying a currency pair and close the trade by selling this, the same pair. For example, a trader who wants to exchange euro for USD dollar buys the euro USD pair. The amount to buying euro USD, the amount to buy euros using US dollars. So pretty much what we are doing, you are trading against the currency to each other. So if you are trading, let's say, for example, euro USD, so this is your quote instrument, and this is your base instrument, and is being quoted by United States dollar. The difference between these two instruments, if the market goes up, that means the difference, it will be adding to the euro trade. It will be adding to the euro price. That price, whatever difference it is, if it is 2, if it is 3, if it is 4, it will be adding to that specific price. If the price is 100, then it will be 102, right? So if you speculate to say that the market will go to 102, that means you make profit because of that difference of you know, from 100 to a true. So that's pretty much what it says, that when you are trading, you're trading two pairs, but actually it's against each other. The ones that has much more power, it add the difference to the one that doesn't have power, and put the price on that level. All right, so how Forex brokers make money? This becomes very, very interesting questions to a lot of people, you know, when they come in the market, and they always ask, how does you guys make money? How does brokers make money? You know, how does brokers take our money, manipulate our system so that, you know, they can make a profit, and so on and so forth. And we need to be very, very careful when it comes to, you know, to these questions, because a lot of people, they will lie to you just to make sure that they take your money. You know, someone, they will tell you that no, brokers, they manipulate, they will take your money. Or someone will say this broker manipulate, that one doesn't manipulate. But to be honest, it's just the same concept how the Forex brokers make money, right? The Forex brokers are compensated two ways. The first is through the bid and ask spread of the currency pairs, which is a bid and ask. Remember, we talked about when you are trading two instruments, and these two instruments, they have two prices, right? So we thought maybe it should have just one price, like example that I said, it's 100 rand. No. So if the bid of euro USD is 100 rand, the ask of euro USD, it will have a different price. Maybe it will have a 102, right? For example, that means if you are selling, it means you're trading the bid instrument. So whatever difference they do, the asking price, it will be adding to the bid instrument, and then goes whether the price is going all the way down or it goes all the way up. So now you see there will be a difference between these two prices, right? That difference, it's called the spread. It's called the spread. This is the spread. So it says the first is through the bid and ask spread of the currency pairs. That's the first way of a broker making money, is putting the spread, putting the difference between the asking price and the bid price. That difference is what the broker actually make money. For example, when the Euro USD dollar pairs is priced at 1.210 bits and 1.222 ask for spread between these two prices is 0.0012, right? To 0.0012, that is known as 1.2 pips when it comes to the pip calculation. When a retail clients open a position at the ask price, the later close it at a bid price, the Forex broker will correct the difference of that instrument. So basically, the first one is between ask price and the bid price. If this one is 100 and the other one 102, the broker is making the two rand that is in between. But remember, these are on pips, so we have to recalculate it in pips. So if it is the difference is 2, it means 0.002. That means the 0.2 pips that the broker has been calculating or has been made per single trade that you actually execute or that we actually execute. Secondly, some brokers charge the additional fee. Some charges a fee per transaction or a monthly fee for access to a particular software, interface of the fee for access to a special trading product such as exotic options. So these are, it differs with the broker. So some brokers, they will charge you a fee for joining because they're giving you the platform for you to participate in a global financial market. So they can't charge you that fee. Some, they can only charge you a fee of a specific instrument, a specific exotic instrument. What it means is that the instruments that are actually having high volume, high volatility, those are the instruments that they can give you a little bit of a commission on top of that, so that when the demand is high and the supply is low, the broker also shouldn't lose anything, right? That commission should cover the loss of the supply. So yeah, man, this is the second thing that how actually, the broker makes, some money when you're actually trading with any other broker. Okay, so we're jumping into a Forex broker fees. Forex broker fees, these are also part of how the broker does make money. In a return for executing a buy or a sell order, the Forex broker will charge a commission per trade or a spread. That is how Forex broker make money. We already covered that they will charge you whether it's a spread, whether it's a commission per specific instrument or per exotic instrument. A spread is a difference between the bid price and the ask price. For a trader, the bid price is the price you will receive for a selling currency, while the ask price is the price you will have to pay for a buying that specific currency. So I already explained that in terms of the bid and the ask, and how the money from the ask added to a bid or the bid added to the ask. As it says, the bid price is the price you will receive for a selling a specific currency, while the ask price is the price you will have to pay for buying a specific currency. The difference that are there is what the broker make. The difference between the bid and the ask price is the broker spread, and the broker could also charge both commission and a spread on a trade. Some brokers may claim for offer commission-free trade. The brokers probably make money, make a commission sometimes widely, so that they can be able to make some good profit. So that's for the fees. The thin line in terms of these fees and the broker, those contemplating trading in a Forex market will have to proceed caution, and many foreign Forex exchange traders have lost money as a result of fraudulent get-rich scheme that promises great returns in a thin regulatory market, right? So again, when you see someone says, put 5,000 Rand, next week we're gonna come and we can make 20,000 Rand or 100,000 or 50,000, that shouldn't be, a good return, in terms of trading or in terms of investing with any type of investment. That should always give us a caution that there's something wrong, or this guy might be able to run away with the money. Again, by looking at, if you're a broker, if you can trade for me, are you regulated? Do you have license? And so on and so forth. Are you a company? Things like that. Those are things that you should be able to understand before you give anyone, or before anyone claims that once you give them money, they'll be able to turn it to, to a dime. All right, the Forex market is not one in which prices are transparent and each broker has his own quoting method. It is up to those who are transacted in the market to investigate their broker pricing to ensure that they are getting a good deal. So again, it's up to us that we are trading to understand that specific broker, how they're offering the price and how it works, how they make money, what commission they charge, and so on and so forth, so that you shouldn't be able to jump in and end up, start losing by not understanding these things. Okay, so the regulations of Forex broker, the industry itself, it's regulated by the Commodity Futures Trading Commission, CFTC, and the National Futures Association, NFA. So this is one of the biggest, regulators in US, CFTC. They actually, regulate all commodity futures trading entire world, right? So they regulate that, put it aside. Then you're going to need to have a license based on your specific area, based on your country. So here in South Africa, FSCA, Financial Service Center Act, they're the ones that they regulate, in terms of financial certificate, so that you can have that certificate that you see when you go to banks, see the nice FSCA certificate there. So brokers also, they're required to have that. And also they're required to have an additional certificate called the OTC, over-the-counter certificate, right? So the Forex platform versus the broker, understanding the differences, right? In the world of Forex trading, there are two key players that the traders need to be aware of: a Forex platform and a Forex broker. Very important to understand that the platform that you are using, it's not necessarily that belongs to the broker. It might happen that it belongs to the broker, but also it might happen that it's just a platform, different platform, and the broker combining together offer you the product so that you can be able to trade. While both are essential for trading, in the Forex market, they serve different purposes. And understanding the difference between them is very crucial for successful trading. In the article, we would dive into the specific of the Forex platform, and again, the brokers and how they complete each other in terms of, trading. All right, so Forex platform, also known as a trading platforms and a software applications or online portal that provides traders with access to the Forex market, right? So this is online portal or a software that actually provides, you can see on your other side, I put a picture of actually, the MT4 and MT5 and how that it looks. So this is the platform itself. This is the Forex platform. All right. This platform acts as a bridge between the traders and the market, enabling them to execute the traders, access a real-time data, and analyze the market trades, right? So you can be able to analyze the market trends with a platform, not with the portal or with a broker or something like that. But the platform is the one that gives you a space where you can analyze, you can see the trends, you can see the real data that comes from a Forex market. Okay. All right. A good Forex platform should be user-friendly, reliable, and offer a wide range of tools and features to enhance your trading. So you should be able to, use it easy. You should be struggling in terms of pressing buy or sell, looking for pending orders, and so on and so forth. It should be user-friendly, so that, because this is something that you do, online, and you need to be able to find whatever you're looking for quickly on that platform that you're using. So Forex broker, the facilitator of the trading. So that one was platform. This is now the broker, the facilitator of the trading. While a Forex platform provides the tools and interface for the trading, a Forex broker are the intermediaries that connect traders to the Forex market. So the broker, they're the ones that connect you as a retail trader to the Forex platform. Without a broker, you're not going to be able to get to the platform. Without a platform, you're not going to see the feeds or the data, the Forex market data, because of you don't have a platform, and you can't be able to see the history of that trade, and you can't be able to analyze. So you need both, right? A broker acts as a facilitator, executing trades on the behalf of the trader and providing them with the access to the liquidity provider. So a broker provides you the liquidity, which is we call the data that we find them on a platform. And we are actually, when you open a trade, we are carrying that trade to execute it on that platform that you actually click. That platform gives you the access to click. When you click, it comes to a broker. I'm saying we. I don't know why I'm keeping on saying we. So when you click that, it takes you all the way to a broker, right? That trade goes to a broker, and the broker will continue offload exactly the same way you did to the market, and you'll be able to see. When you close it, the same thing. You are instructing us that you are closing the trade. We have to, the system has to do it immediately, closing your trade. They earn their revenue through spread, which are differences between the bid and ask price. So this is how the broker earn the revenue. We already passed that. The relationship between the Forex, Forex platform and the broker. The Forex platform and the brokers work hand in hand for facilitating a trade in the Forex market. The traders need a Forex platform to execute a trade, access the real-time data, and analyze the market. At the same time, they need a Forex broker to connect them to the market, execute their trades that are providing with them with the liquidity, right? So as we said already, that the platform gives you the real-time data. You need a broker to help you to access that platform, and again, to help you to execute those trades when you instruct the market that open a trade or close the trade or something like that. All right. And again, I think quick presentation. That was really nice and quick. It's something that you can go on and check and go through it and check. Don't forget to subscribe. If you have a question, the number is there. The email is there, thedailymoneymarket@gmail.com, or you can actually, hit me up on the email. You can comment, just maybe some of the things that you should be able to know in terms of the difference with the, brokers that you should choose. So most of the time when you're looking about the broker, when you want to trade, understand the spread of the broker, because that's how we make money. That's how the broker makes money. So sometimes you find a broker that they have a bigger spread. Sometimes you find a broker that have a lower spread. It helps you if you are paying lower charge, than paying higher charge. Again, find out about the commission, what instrument they actually give the commission, right? And how much is the commission for that specific instrument. You might decide to trade Bitcoin with whatever broker that you're trading with. You realize the commission of Bitcoin is actually higher. You might trade, you might see Elon Musk say something. You want to jump in and trade Tesla, find out that the commission of Tesla, it's a bit higher. So understanding this, it helps you to choose a specific broker. Then again, something to help you. You can even go deeper in terms of, remember we're talking about the currency pairs. Those are the ones that we trade. So the currency pairs, each and every instrument that you trade, it has a contract size, right? The contract size, it actually means that the volatility or the movement of the trades, it's based on that, the contract size. The higher the contract size, the higher the trade will move faster. The lower the contract size, the lower the trade will move. Now, the advantage of that and disadvantage is that when the trade is moving, the lower contract size, it will also require a small margin for you to execute the trade, because the trade doesn't have that much demand, that much volatility in the market, right? While the ones that have a higher contract size, it requires that much demand, it moves fast. Now it will need much more in terms of margin required to execute that trade. So it's up to you. Some people, they want to trade that it will take them, in a minute, give them a bigger profit. but it won't. But if it goes against you, it gives you a bigger loss, you know. Some people, they will prefer that I will trade with a broker where when I open a trade, it must gradually, you know, grow bit by bit. Again, when I'm losing, I must also lose gradually bit by bit. So those are another different things that you need to find out when you actually, you know, finding a broker. Again, find out if the broker is regulated, where they are regulated. If you want to check, you can always check it out online to find that if, you know, if actually the broker is actually, you know, regulated or not. So yeah, those are again key points. What else? I think that's it in terms of you know, the key points that you need to make sure that, you know, you're aware when it comes to a broker. Oh, one more thing, just to understand a few things in terms of a broker, because a lot of people, they will tell you, I'm a broker, I'm your broker, give me money. I've been hearing these words for a very long time, and that's why I'm explaining to it over and over again. You know, in order you to be able to offer maybe let's say, for example, a license, you need to go through in terms of, you know, regulatory exams. You need to go through in terms of RE1, RE2, RE3. You need to go to key individual. So that's pretty much 4 to 5 regulatory exams or certificates that you can get. Then if that person says it's a broker, tell him that, oh, can I please see your key individual certificate, right? Maybe they will show you the key individual certificate. Because of the license of the FSCA, it's actually offered to those ones that they're holding the key individual, right? That they can be able to monitor everyone who's working under them, guide them in a good way, give them a good instruction, and be on a good standard. When you go through these exams, that's a key point that comes, be on a good standard of people. So those are the things that we should be able to, you know, to know about the broker, or when someone trying to confuse you about the broker, you know, online, especially online, man, you know, it's crazy there. So yeah, man, thank you very much. Thank you very much for watching this video. I thank you. Keep subscribing. I mean, keep sharing with other traders. We are also the industry player who want to, you know, to push this industry to grow. But yeah, man, this is the Daily Money Markets, and thank you.